Because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, excuse me, I've got a chart up here of Bitcoin. I have no interest in it. Well, I don't do any stocks at all, but I've never done any crypto. Well, did one crypto in my life. But anyway, hold on. Let's just see here. This is where we are with right now. You can see the ABCD pattern right here at $53,000, okay? And we're already below the ABCD. We have the big wide range down today, which is a little bit troubling because it's quite a bit of a drop. And so if we get below this 53,000 today, folks, that's the 61% of the last major low here. Plus, it is a 382 of the whole move. And as you can see, these 382s have been pretty much spot on with Bitcoin. So it's very important it holds 53,000. Below 53,000 would be be very, very troubling if you want to be long the Bitcoin at that point. So that I'm bringing that up to you from a technical basis, folks. Other than that, I don't do much with it, as you already know. I just wanted to bring it to your attention that 53,000, I heard it on the news just a while ago, was trading there. So closing below that would be a very, very troubling sign. Now, I want to get back to that chart here with Gartley. What I did was I wanted to see what was happening, during the 1929 market. And that's what I was looking at right here because we're having a tremendous move here. This market was straight up, folks, for 8 years. Well, we've been straight up for 15. Well, we've been straight up since 1932. So how many years is that? That's 92 years we've been straight up. There's been some corrections, of course, but the crash of 1987, that wasn't a crash. That was I'm sure the market was down quite a bit that day, I think 20% or something like that, but that was nothing more than a great buying opportunity because all it did was make a 61% retracement of the low, from 1980. So that's from 87 to 80. That was the pullback, and of course it's had their big run up here. But what I wanted to show you here is when the top was made in 1929, you can see how the transportations were going along with it. Now this time, the transportations are way down here, folks. They're so far from making a new high, it's ridiculous. So I thought that was a little bit unusual, plus the fact that we've got more new lows and new highs, which is quite troubling, I would think, but those are things that you have to figure out. But what I did was I compared this section right here with what's happening in the NASDAQ right now. That's all I did. I'm just going to give you a heads up because I'm going to be covering this in depth in the newsletter this week, okay? So let's just get up here and we'll take a quick look at it. I think this is the best one to look at right here. Now, this is going back to there's your 09. Remember I said, this is going to be the biggest rally since 1938? Well, I was right. It went from 1,300 to 20,000 in the NASDAQ. And of course, the old high on that NASDAQ had been, 5,000. So it went from 5,000 down to 1,300, and there we are today. But if you look at this big 1.618 number up there, folks, with that ABCD, now I did this over the weekend, and last time I checked, it was at 204.45. The high today was, I believe, 2,620. That's what I was looking at. Now, this was 20 months up in the move, okay? 20 months up in the move. So what I did was, I wonder if that makes any sense. So I went back and I pulled out this chart. Now, this chart, it was actually in Gartley's book. It's 2 feet, it's 24 inches high, and it is 36 inches wide. And I had it blown up to almost the size of a wall in the trading room that we had up in Pismo Beach. 20 minutes, I had all these charts from the Gartley book from the 1930s and stuff, 20s and 30s, so we could compare the patterns all over the wall up there. And when we left, boy, people really wanted those, and they were kind enough to take them off the walls and did all the repainting for us. But that shows you, if you don't believe in ABCD, folks, look at this market from September the 3rd down to January, or to July the 8th of 1932. Look at the ABCDs down here. Look at these, folks. They're just, but what you're going to really see is, I have to give my hat off to Basil Chapman, folks. You know, I haven't looked at moving averages in 40 years. Well, let me see, for 85, 86, 87. Yeah, it's been just about 40 years. When I was at Commodity Corporation, they quit using, they use some type of volatility. But you wait till you see in the letter that I send out this week what happened from this point right here to this point right there. It's going to knock your socks right off. It knocked my socks off. I even called Basil over the weekend to tell him. I said, my God, I can't believe this. Well, I'm going to show you what happened in the newsletter this week when it comes out. All right, now what we're going to do now is we're going to take a look at this NASDAQ on a little bit shorter time frame. We're going to go to the weekly, and there you see there's the high there. It's supposed to be at 206.60. So far, the high has been 206.20. That's a large ABCD pattern right there. That's what that's doing. And it's the larger ABCD pattern, this one. This is that monthly one that we looked at, okay? They come up to this level here, at this level right there. So that's what I was watching here today. Whether that means anything or not, probably not. But at least it's very, very funny that it happens coming at the same time. Now, I had a reluctance to look at that, because I have never found these anniversary dates to be very, 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 very helpful. I went back and looked at them, and you'd say, well, if that was the case, how come something didn't happen on this date and such? And you just don't see those anniversary dates pop up. Yeah, occasionally they do, but not very often. I have had very little luck, and the guy that was doing the work was 20 men, and he didn't work on luck. He worked on hard work, and he didn't find them either. So we're going to find out whether it works or not. I don't know. The only reason I'm bringing this all to your attention, folks, is because we are over at a major anniversary date over the weekend, and we got this big full moon coming in here. I believe it's a full moon, isn't it? Nope, it's a new moon today. Sorry about that. And Shane Smolan is our guest, the wolf trader himself. Okay, now those were the main ones that I wanted to do. I covered all of that with that. Now let's take a look at one of the stocks that we always look, which is Mr. Appel, who's down by the well. And here again is one that it's just knocking the socks off the park here. And we could easily do that here in the stock market today, folks. Remember, I said we're going to have a lot of trouble up here at this 121 level. Well, you see it opened at 119, and we are $4 higher already. We went through that 618 like it didn't even exist. And we could do the same thing with the NASDAQ. So when these patterns fail, that's it. But you can see what we've done here with Apple. It has made new highs and busted through the 1.618, that whole move right there. That's your first danger sign that what I'm talking about is most probably not going to happen. But that's neither here nor there. We're gonna do it one day at a time. Okay, now the other one, of course, we've been watching this one because we have a position on in the Dow Jones here. Remember, we sold the Dow Jones on this large ABCD pattern up here, and we've been in it ever since. It's never gone against us. We'll just draw it in so you can see it real easily. There's your ABCD. We always said sell the weakness. You know, there was the 786 was right there. Our stop was right above there. And so we still have a couple 100-point profit, and it's never gone against us, even through all the NASDAQ and the S&P and all the stuff. And even today, you can see it didn't do anything. It just backed off to the 61% retrace. It hasn't gone down much.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, so, we'll take a look at Tesla here. It's still chugging up. There was the 618 retracement here. We had a little bit of an ABCD. You can see this nice little pattern that was in here. There's your ABCD. That fit pretty good. And we just exploded the upside. I originally thought this was going to get down to 120, but of course it's exploded to the upside just like everything else. Now, I've had 2 requests now. One is to look at natural gas. Now, hold on one second and we'll get it up and take a quick look at it. More than happy to do that. That starts down in this area right here. And there's natural gas. So we'll bring that up and see where we are. Oh, it's still coming down. Well, they're trying to get, it looked like it was going to hold there this past couple of days, but then it's broken down to the downside right now. This is definitely, see, it held here to this 244 level. Once we went below the 240, it was just, lights out. Let's look at this on the hourly. You'll be able to see what I mean here. This is where we were looking at this level at 240. You see how it held here roughly, and then it started to fail. Right now, there's nothing in the cards that tell us that we're going to be anywhere near a bottom. At least, well, the 1.618 comes down here at this level, which is 224. That would be Custer's last stand, in my opinion. And we'll see, there's your ABCD, and that comes in here at 224. That's down another $9. The next one that we had a question on was something I haven't seen in a long time, but I have to put it in here, which wouldn't take us very much longer. IBB. This is the ETF for biotechs. I think that's what it is. Let's get this up here. It might have biotech technology. Okay, here's where we are with the biotechs. I don't know what's involved with this, but this one has had, folks, this is a butterfly pattern right up in here. That's a bearish pattern, and you can see it's not actually moving with the rest of the market. There was your ABCD. Let's see how close it came to the exact number. There's your AB leg right here. There's your CD leg right there. And it came in, wow, how could they be the same? This says 140.88 and the high was 140.88. What a surprise. That must be a coincidence. But now we're coming down. We're at pretty good support now. You see, we're equaling the last move down by just a little. You can see it's going beyond it because it's a tiny bit bearish. The two things that are bearish is below the 786 of this last move right here. You see, we're trading right at it. I stand corrected. And then we also are looking at it, the 618 from this level right here, both the same, right on the money. So this is good support right in here. Below 134, you don't want to have anything to do with it. So your risk here is really small. Remember this pattern, folks, because we pointed this out to you the last time I was on here, which was last Tuesday. And let's get this up here, which is the Treasury Bondolis. Let's get this up here on that 4-hour. Yeah, I believe it was the hourly we were looking at, or daily, I believe. Of course, yep, there it is. We're looking at the same pattern here that we just saw in the biotech right there. There was your 61% retracement. Okay, there was your 786 of this one. 618 of that one came in right there, exactly on the number, 115.30, and the low was 115.29.5. We've had a really strong rally for 1, 2, 3 days, and it is approaching the 61% retracement of the last high, and we'll bring that up so we can take a quick look at, and there it is right there, right at the 61% retracement. There was a sell signal right there, folks, and of course it had a nice move down, and now it's back up to this level right here. Folks, I do not trust what the Federal Reserve is telling us, because the bonds that are out there, the $3 trillion worth or more than that, they have to be reclaimed somehow, and there's no way we can pay the interest on it, because it's too much. It's $1 trillion. It's like our defense budget. So they're going to have to let it float. The only way they let it float is by hyperinflation, or they're going to renege on the bonds. And it doesn't appear that the Treasury, the dollar bills will say, "In God we trust," anymore if we do that. So hyperinflation might be the way to go, and that means that all this stuff could literally just run into a time like we had in Germany during the 30s, and we'll see if that's going to happen anyway. There's where we are right now in the Treasury bonds, right at the 61% retracement. And so that should be it as far as a rally, because it's a nice 3-point rally. We got, 4 points down, 3 points up, 618. That's where it's supposed to be. So I hope that clears that up for those. Okay, let's get rid of that here and get back in here. And we're going to talk now about the U.S. dollar, because that's going to be another one that's going to be affected by all of this stuff here. I'll try to get a video out on the U.S. Well, I will over the weekend, because this is Friday. Hopefully I'll be able to get, with Google, I'll be able to get everything up here, because we've had some big moves here in the U.S. dollar index. We pointed this out before. If we look at this on the daily, you remember we were right at that ABCD pattern. There it was right there, within, I think, 10 pips of the exact ABCD number right there. Now we're coming down strong, and we're hitting some pretty good support. There's July 4th, and then, of course, there's July 5th. Now, the rest of the world doesn't recognize July 4th, so they were still trading. So that was the euro-dollar index, so it's at major support in here. It has to hold this level, or the U.S. dollar is going to be in trouble. So what we'll do now is we'll look at the euro. It's going to be the upside-down version of it, and that'll tell us if, in fact, that's what we're looking at right here. We'll put this up here, and you'll see that we should be making a high here in the euro, and there it is. Now, if we're doing the same thing, we should be really close. There's your ABCD move right here. You can see it, 26th of July down to June, down to July the 2nd, and we'll get this up here, and you'll see there's the ABCD pattern coming in right up here. We're just about there. Well, that's pretty much it. See the euro is at the 618, and there's the 618 in the euro right here. This is where it is in the euro. Excuse me. The euro is a little above the 618. The dollar index itself is at the 618. The reason is the dollar index has got 29 different currencies in it, whereas this it only has 11 currencies in it. This one has only the euro, so that's why there's a slight difference at most of the time. Like on this ABCD pattern to the downside, it should be equal to what happened in the euro because that's 53%, and there's your ABCD to the downside. ABCD, we thank Mr. Gartley for that because he was the first one to use it. 1937, folks. He published that book. It was $1,200. It came with charts like I showed you that you can still get. I think it's available somewhere for a couple $100 with all the charts and the 600 pages, and the most important pages are page 200 to 250, which shows all the patterns that we look at because that's what we're doing, folks. Pattern recognition, swing trading, and that's what we're trying to do. Now, I believe we have Mr. Shane Smolan coming in for a little soiree here in just a second. Let's just check with the, oh my goodness, hold on just a second here with the news desk and see where we are. Oh, we got 44 seconds left. My fault, but what we're going to do is we will have some videos out over the weekend and everything. Let's get the rest of these done, and we'll see what we have going on with the market. And Shane will be on right after the break. That's the natural gas, and that's what we're waiting to see right now. Okay. Oh, I knew that was coming. Yeah.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, folks, I believe we have the wolf trader, Shane Smolan, in the house. Shane, how are you doing, my friend?
Larry, good to hear from you. Good to talk to you.
Well, Google had me on a commission, but I'm back, and I'm staying back, hopefully, till the end of the day. Who knows? What are we looking at, buddy? We got gold screaming, Bitcoin dropping, stocks going up. Boy, there's a conundrum for everybody, I guess, is the word. But what are you looking at here?
Yeah. Well, I have 4 markets for you today. I have corn, the bonds, I have S&P, and Bitcoin. So those are my markets of choice today. So we'll talk about those. So corn, let's talk about corn. Everybody's been talking about this, these low prices in corn. The BAT model has been in this downtrend since 621, but we just got a buy today on the quad lunar. The one thing I want to talk about is the price is diverging against the biorhythm, and I'm going to get into the biorhythms on S&P today too, because there's some interesting findings. But these are long, you could think of them as long-term cycles. This biorhythm just made a high, and so the fact that that's happening means that we probably will continue to see lower prices through August on this the corn, and then I do expect a major low later in November or December. So I'm going to show you what I'm talking about with these biorhythms. So essentially, I'm looking at these two biorhythms here. You can see this is the corn chart here. Sorry, one second. I'm trying to get the pointer here, but it's not. There we go. Okay, so I got you can see here, corn has been diverging lower against this. And then when this happens with any types of cycles, what happens is once it makes that high, a lot of times it will continue to push even lower. So you got one coming into here and then another one coming into here. So this is in July here. Now, we're going to get this longer term cycle rolling over into corn. And so I do think that there's a good chance corn will stay down or will stay depressed here for some time. And again, I do expect once we get out here into December, I do think we're going to see a better chance for a longer term low on corn. So I know people have been talking about this, but the next, one push I would look for lower here too is right now we're obviously getting this high, but once this longer term biorhythm turns sometime in September, I do expect another push down in the corn market. So it's been an interesting market for sure. And so, this is another perspective here. These are 2 longer term cycles, and you can see here they're both still pushing down. And so I do expect this to be having some sell pressure coming in on this all the way here into November, December. And we want to try to align when we're looking at any type of a cycle or super biorhythm. You want to try to align when they match up. And we do have a major low coming into here, like I said, around Thanksgiving or Christmas. So I think there's a good chance that this market will stay somewhat depressed. And I wanted to touch on that just because I know you talk about this a lot. You talk about the grains, but the longer term cycles or super biorhythms do indicate that we're going to be heading down. Now, the bond market is an interesting one. The BAT has been in this downtrend. Oh, I didn't show the corn market. Actually, the corn here, you can see here, just one more perspective here. You do have this quad lunar cycle making this low today on 7.3, but this has been a very, very persistent downtrend here on this corn. Okay, so getting back to the bonds here. Bonds are in a downtrend since 621 on the BAT. Quad lunar just makes this buy, but price is diverging against the biorhythm again, just like we saw with the corn. And so we do have some significant bottoms occurring here later in July or August. And that's interesting because that's when the Fed meeting is coming. So again, this is the 10-year here. You can see here that the BAT model, it just goes into this buy here. So we kind of have a mixed bag right now. But when we look at the actual cycles here, what I want to show you here that I think is very, very fascinating is that you can see the price here on, this is the 30-year. You can see it's kind of, it hooked up today on that news, but you can see we're coming into some tops into here. So I do think it's going to continue to try to have some downside pressure. But once we get into this late July period into here, mid-July, you can see there's a lot of bottoms forming into here, and that coincides with the Fed meeting. So, and also you can see this longer-term biorhythm is pushing higher here also. So there is a lot of bullish setup coming here, I think, for the bond market. I just think it's going to kind of coalesce around that Fed market. Probably the language will change a little bit. We're starting to see a little bit of like a tick up. We're seeing the unemployment tick up to 4.1%. So I do think that you'll start to see some language probably from the Fed that will become more dovish, and so that would also make sense to go along with these cycles here. So I do expect on a short-term basis for us to be kind of hitting a low here later out into July and August. So I just thought I would put that out there because people do ask me a lot about this, and then you do have this medium-term and longer-term cycles rising for this is the 30-year, but going all the way out into August. So that would make sense that a Fed would turn more dovish next month, and it would go along with what we're seeing here in the cycle. So I would see depressed corn, and I would expect to see these bonds getting more bullish or interest rates coming down a little bit with the Fed. Now, let's talk about the S&P 500. S&P 500. I'm changing my perspective today. I'm going to talk about this, but essentially, the BAT and the quad lunar cycle are in a buy right now on this. In others, these are two of the indicators that we track. Now, there is a change in perspective here. I want to talk about this. The Fed juice and the Fed internals are having a recent surge, but they're still in a sell. But this is starting to look like the April high. Now, we're starting to see a possible change in perspective here. I have seen this Fed juice has been flatlining. The internals have been flatlining. But now we're starting to see two surges that we've seen since April. And I'm monitoring this because if this surge continues, that's a very bullish sign. Now, we've seen these extreme levels of momentum, so it's kind of a confusing thing. We're seeing these ultra high levels of momentum. We have not seen them since 2018. The new highs on the rally are diverging lower, which is also generally these are bearish signs. And the lows, this is another one that's interesting. The lows continue to outpace the highs on an advancing market. Now, why do I bring this up? Because these are all generally bearish signs, right? I mean, when you have the lows outpacing the highs on a rally, that's very hard to find. I mean, you can find it in some instances, but when we've seen this in the past, it has led to collapse in markets. Now, if I wasn't looking at what I'm seeing now with the Fed juice starting to surge, I would say, well, these are all topping patterns, it's bearish and all this, and I've been looking at that up to this point. But I'm going to show you here this chart here. This is the Fed internals, and this is what is getting me to change my perspective on this, and I'm going to get to the super biorhythms in a second. So the Fed internals here have been in this persistent falling pattern here, just falling during this tightening period. But there were two surges here. The first one happened here, right here near this high, in the March-April high. This was the conflict that we saw in Israel-Iran. Then it pulls back. You can see the market pulls back with it. But the thing I want to point out here is at this point, it did remain higher, and it was kind of going sideways. And to me, it still looked like it was in this downtrend. But what we have seen in the last I would say 10 days, we're starting to see a big surge here in the Fed internals. Now, why do I bring this up? Because these are the big guns. I mean, this is the big stuff. I mean, when we talk about rate cuts and quantitative easing, this is what I'm monitoring behind the scenes here, and this is starting to take on a much more bullish profile here. So we'll talk about this when I get back, but very important.
Thank you very much. We'll be right back with Shane Smolan, folks. Stay tuned.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The stock market is a delicate interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Back, folks, with Shane Smolan, the Wolf Trader. Please continue, my friend.
Okay, so I wanted to put this into context because this is the big stuff here. This is the stuff that pushes markets way higher when the Fed starts getting behind this. So this is what we're starting to see. So the perspective is changing here now. And if this trend continues, this market can go a lot higher. It doesn't really matter, all the support and resistance. None of that stuff matters. If the Fed gets behind this market, especially if we start to see the language change in the next meeting, you're going to start – there's a lot of potential here. Now, let me show you the super biorhythms. This is another one here that to me is looking very bullish. And when you put that together with what we see with the Fed, this is becoming just a very strong looking chart here. So I have all of these biorhythms on here, different levels. You can see these longer term and medium terms, but you can see we're hitting a bunch of lows into here right now. And this is going to continue to surge all the way out into July, August, September. And the markets essentially just kind of went sideways during the bottoming period. And also, went up and went sideways. So now I'm looking at this and I'm thinking that this together with what we're seeing with the Fed internals changes everything. It changes the whole perspective of the market. Now there are some markets that were not responding, like the Russell was still down. You can see this, but I do think there's a good chance now that you'll start to see some participation increase on a broader base perspective if the Fed gets behind this market. Now you can see here that the quad lunar cycle, this is the chart here. I have a quad lunar cycle and the planetary speed index, but the quad lunar cycle is this blue arrow. It's been in a buy since 7.2, and it's in a buy until 7.16. So that to me, that combined with what we're seeing with the Fed now, I'm turning much more bullish on this market. And I don't really care about support resistance, all that stuff. When the Fed gets involved and the Fed is starting to push up, to me, that's a very bullish sign. If you look at some of these technicals, you would say that this is a bearish setup. I have here the S&P here rising, and then you have this is the New York Stock Exchange, the new highs are decreasing the whole time. In addition, we've seen a very strange situation here recently where the market has been advancing on new lows, which is really hard to find. I can go back and look at some situations where you find that, but the markets collapse usually when that happens. You can see here in this first graph, this was the first decline here during the Israel-Iran conflict. And you can see normally the new lows are supposed to spike when the market falls, but we have a situation right now where the lows are advancing and the market's rising. Well, normally I would look at that and I would say, well, that's really bearish. I mean, that's, we've seen situations like that before. The market has collapsed. But now that we have this perspective with the Fed internals rising, that really changes everything. And I'm going to show you another picture here. This was really one of the only other instances I could find of a market rising with new lows. So I'm going to come over here. This is the S&P here. Normally, you can see when the S&P falls, this is 2018. When the S&P falls, the Fed and the lows are supposed to rise. I mean, that's normal, right? Now, we've seen some situations where the market is in a rounding top, and then the new lows come up before the market turns, and that usually leads to a sharp decline. And then, of course, when it falls, the new lows come up. Now, that's normal. But unfortunately, for the bears, what we're looking at right now, this has completely changed now. This is on its head. The fact that we have this support now coming in from the Fed and the fact that we are hitting these super biorhythm lows, I think this market has much more room to go to the upside here. And I think with this election coming up now, you got all bets are off at this point. I mean, I was looking at this. I was waiting to see, was this a turn in the Fed internals? Was this just a one-off that they did? No, it's not. You can start to see here, they're starting a new trend here. And so I think that's going to be pushing the markets higher. That's my look at this point. I really follow what the Fed. I'm very closely follow. I couldn't see anything now, other than that first surge, but now I start to see this is something now that is developing. So I think we have to be open to the possibility of higher markets here to come. Now, and it's confusing because, like I said, you saw all of those New York Stock Exchange making the new lows. You saw those negative divergences, but ultimately, when the Fed gets behind this thing, it has the ability to push this market much, much higher. So let's talk about Bitcoin. We still have some time here?
Oh, yeah, we sure do.
Okay.
We've got 4 more minutes.
Okay. This is an interesting one because Bitcoin's been in this downtrend since 611 on the bat. And I've been talking about I tracked this super biorhythm. The only one that really was kind of acting up on these super biorhythms was the S&P. I mean, we track over 30 different markets. Usually these super biorhythms are good. Now, Bitcoin, I have been talking to people about this, that back in March, I was like, this super biorhythm is falling through most of the year. I am not feeling good about Bitcoin at this point. I had this big down move today. It's also coming into a cycle of super biorhythm high into here. So I do expect Bitcoin to show weakness. Now, we track Bitcoin versus gold too, and you can see here we have this spread. The spread has been long gold, short Bitcoin. But one interesting thing here that I pointed out is that Bitcoin has been diverging negative with S&P. Now, Bitcoin has led S&P lower in a lot of the most recent sell-offs. We go back to COVID. Bitcoin was always there. In fact, Bitcoin, if you go back and study it, it responds to quantitative easing too. Even before people knew what Bitcoin was, it tends to rise with what the Fed does. Normally, I would look at this and say that is a negative situation. But now that the Fed is behind S&P, it changes things. Bitcoin, I'm still negative on this, and I still think that this is going to be coming down. And we've been talking about this for some time. I've been warning people about this, trying to warn people about this, that it's coming down, and people are getting excited about the institutional buying and all this with Bitcoin. I do think Bitcoin ultimately will be around. I don't think it's going to be evaporating or anything, but I do expect these cycles to continue on this bearish tone through much of the year going on here. And now if we take the perspective of S&P, we're talking about if this is speculative money. If the Fed is getting behind this and we are going to start to see much, much higher prices in S&P, it makes sense that could also weigh on Bitcoin too. And so, we'll see. But ultimately, I have not been feeling very good about Bitcoin here. You can see it's been in the sell signal on the bat here since 611. And it's pretty much been following these signals very well, but this breakdown has been significant. And even with the quad lunar cycle, it still broke down with it. And the quad lunar cycle goes into a sell on July the 9th. So again, there's more sell pressure coming in on this around 7-9. And so I just think Bitcoin is, at least in the near term, then I would say the next, through the end of the year, I don't feel very, very bullish on this. And so I'm not sure about the perspective, this whole institutional merging of Bitcoin. I'm not really sure how I feel about that, just because the whole concept of Bitcoin was to be against the institution, to have this whole separate banking system, if you will. And so now that has merged, I think it's kind of created these murky waters with Bitcoin from its original mission statement. The original mission statement was, to be independent and to have its own independent banking system, if you will, or currency. And so I think it'll be interesting to watch the currencies that don't merge with the institutions. They may actually end up doing better. I think if if they stay completely independent from Bitcoin. But ultimately, I do think that, like I said, I do think that Bitcoin is going to continue to show weakness here. And like I said, S&P, to me, at this point, you cannot ignore this, what's happening with the Fed right now. The Fed internals are starting to surge. And when that happens, like I said, these are the big guns. I mean, this is the big stuff. So when this starts to get behind the market, it really doesn't matter what the overbought, oversold levels are. I mean, we're at oversold levels here. I made a chart here. This is the last time we were at an overbought level. Last time we were at an overbought level, like we're seeing now, was in 2018. We had a collapse, but that was between Fed cycles.
Listen, thank you for joining us, my friend. We'll have you again soon, okay?
Thanks, Larry.
Okay, thank you, Shane. We'll be right back, folks. Stay tuned.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, this is the weekly NASDAQ that I brought to your attention when we started. We're within 25 points of the exact number we were looking at, which was 206.61. This means that probably this isn't going to work this time, and I'll be back to using moving averages, and I've got some really good news on that. I saw some stuff when I was going over this Gartley material that literally literally blew me away, and I'm going to share you with that in the newsletter that I'll send out here this evening regarding the gold. It's got all the way up to 23.90. Silver got up to 31.40 or something like that. So it looks like there's going to be funny money rolling around, and that could be right down the path of what Mr. Smolan was telling us about. If the Fed's in there, they can do whatever they want to, just like the Germans did during World War II, when they started to hyperinflate, and that could happen to us again. So if that's the case, all bets are off, and we could see something that we've not seen in quite a few years. Remember, we've got a president that's in trouble right now. We had one 50 years ago at this time. Mr. Nixon was in trouble, and here we are 50 years later, almost to the time that so I think it's exactly 50 years, if I'm not mistaken. No, his was 73. This is 04, so it's 51 years, but there might be a cycle related to that also. I believe that we have a guest on Monday. Let me double check the old program here. No, by golly, that was my son-in-law's birthday. Anyway, we're going to be watching that real closely for our guest coming on Monday. I'm hoping to have Stan Harley. It's a question of whether he gets back from his holiday or not. I spoke with him. He's having a very good time, and we certainly don't want to stop doing that. So live every day in an attitude of gratitude, and may God bless. And I'll see you on Monday, folks, and have a wonderful extended weekend. So may God bless.